Hi everyone, today I'm going to list the top 4 Canadian ETFs to buy going to 2026 and why I'm choosing them. I can guarantee you'll not be disappointed with the long-term results of these investments. Investors that are looking to take a passive approach to investing or buying stocks, this video was made for you, but it isn't just geared towards beginner investors. This is for anyone looking for a set it and forget it style of investing. Investing in the right ETFs can limit your risk when there's market volatility. I've made a few intro videos about ETFs if you need a refresher or if you've never heard of them before. These 4 Canadian ETFs, you can buy one of these, all of these, or any combination based on the info I gave you. I make these videos once a year, every November, and they've been my most successful videos. So here I am trying to recreate the magic for the 5th time or 6th time. Apologies if you've seen it 6 years in a row. These last 3 years are on track to be the best performing market returns we've had in the last 20 years. 3 years of data is such a short time frame. I'm actually making this portfolio and my recommendations for people looking to hold for at least 5 years. If you need the cash within 2 or 3 years, I don't think the stock market is the best place for you. You're looking for saving accounts, not investing accounts or investing advice. First up is VFV. This is the first ETF I'm recommending, and this is mandatory for every portfolio. I would allocate 50% of my entire portfolio to this one ETF, and I'll explain why. If you want to purchase, you can type in VFV. I'll try to show in a Questrade or a Wealthsimple example of how to buy it if it's your first time buying a stock. You can choose VFV or VFV.to. Those are the same thing. The latter is just denoting the Toronto Stock Exchange, and it's in Canadian dollars. However, if you have US dollars, we can buy the same thing called VOO, but I don't assume anyone has USD. The price is around $167 per share Canadian. Actually, when I made this video last year, it was around $140. So you can see just the 1 year increase from when I last recommended it. The dividend is 0.86 per share, which is so low, it's almost non-existent. However, you're buying this for the stock appreciation, not the dividend. That's just a little bonus. The management expense ratio is 0.09%, which means for every $10,000 invested, you'll pay about $9 in fees to Vanguard, the asset manager or the manager who created this ETF. But this $9 is not coming out of your pocket. You don't actually pay this. It comes out of the return of the ETF, if that makes sense. This ETF mimics the S&P 500, which is the largest 500 companies in the US. But keep in mind, companies in this ETF like Amazon, Google, Tesla, Nvidia, and Meta, I think I got those. Those are global companies, so I don't think you're solely invested in the US. I mentioned this earlier that this is mandatory, and it's because the S&P 500 is considered the market. When you hear someone saying the market is up or the market is down or the news is saying this, they mean the largest 500 companies in the US, they mean this ETF. If you want to judge your returns or someone else's portfolio returns, if they don't get the same returns as the S&P 500, there's no point, you're missing out and you're just losing money. If you're nervous about investing or nervous about investing 50% of your portfolio in this one stock, if it's $1,000, $100,000, or $1 million, you just take a look at the returns from the last 16 years. Another item to keep in mind, every 10 years or so, in theory, we should get a correction. In 2008, we had a huge drop because of the financial crisis. We had a dip in 2018, then again in 2022. So if you look at the trend, technically we're 5 years away from another big drop, but the market always recovers. We can take a look at the specific returns of VFV if you invested 3 years ago, 5 years ago, 10 years ago, or even in 2012 when the ETF was first created. VEQT is the second ETF I'm recommending. I would allocate 25% of my portfolio to this one ETF. You can use VEQT.to. It's the same ETF, but the TO is just letting everyone know that it's Canadian and it's on the Toronto Stock Exchange. If you have US dollars, you can use VTI. That's the same version of the same thing in USD. VEQT is currently trading at $53 per share. And remember the same video I made last year, it was at $45 per share. They pay dividends annually around 1%. But again, this one isn't for dividends, it's for capital appreciation and growth. This ETF is the definition of diversified. You're indirectly investing in 13,467 different stocks all over the world. This ETF is the reason why I'm confident in the returns and why I'm recommending it in every video, because you're not just picking one company to invest in, you're picking every public company in the entire world. The management expense ratio was a little higher than the last one at 0.24%, meaning if you invested $10,000, you'll pay $24 in fees. If you're wondering why I'm recommending this, when I just said the S&P 500 is the best return in the definition of the market, it's because I'm trying to future-proof your investments. The US has been the best geographic investment over the last 100 years. However, that doesn't mean that the S&P 500 will always be the best, and it doesn't mean the US will always outperform. So I want everyone to have global exposure. If the world stocks go up or go down, I want everyone to take the ride up or down with it. That's why I'm recommending investing in VEQT for global exposure. You'll also notice that this ETF also has the same stocks as the S&P 500, the first 500 of them. You're buying the same thing twice. You're investing in Apple and Google and Facebook twice, which is fine. I've done this on purpose. Just trust the process. If you look at the returns of this specific ETF, it was only created 5 or 6 years ago, so we don't have 10 or 20 years of data. But if you invested 5 years ago, you'd be up 77%. If you invested $10,000, you'd have around $17,700 without dividends, which is great. For my third choice, I usually change my mind every year on what to do in terms of a dividend ETF. I want to give some people some short-term satisfaction, some cash payout. So I'm going to recommend VDY. I'm adding some dividend power to this beginner portfolio. I would allocate 15% of my portfolio to this ETF. VDY invests in the highest yielding Canadian companies. If you look at a lot of the biggest Canadian companies, you notice most of them pay dividends anyways, but this is paying you monthly dividends instead of quarterly, which is a nice little bonus. The yield is 3.53 annually, so investing $10,000 would get you $353 per year or $29.40 per month. Here's a summary of what you'll be invested in. If you take a look at the percentage of each holding in this ETF, for example, that same $10,000, you'll be holding $1,500 of RBC, the biggest bank and biggest company in Canada. You're holding $1,000 of TD Bank and $700 of Enbridge. Even though dividend stocks usually have lower growth, well, most of the time they almost always have lower growth. If you look at the last 5 years of this ETF, it's still up over 92%, all the while earning monthly dividends. For my last pick, I need everyone not to fight me on this. Every year I make the same recommendation and I still stand by it. Everyone needs to accept that crypto, more specifically Bitcoin, not any meme coins, Bitcoin is here to stay. I need everyone to invest 10% of their entire portfolio in Bitcoin. Just hear me out. It's been like 16 years. It's getting more popular. Even institutional investors like the hedge funds, like billions of dollars are coming around. It's part of society now. It's not ready to be a currency yet. I don't think it'll ever get there, but I'm using this to speculate. And just over the last 5 years, it's been amazing. So if you want, you can use FBTC.to. It's an ETF that holds the coin. Buy this in your TFSA and just hold it for the long term. Speaking of accounts to invest in, everything I'm recommending you should buy in your TFSA, FHSA, or RSP first. Always use your tax sheltered accounts first. I'll link a few intro videos about those accounts if you're interested. And I'll stop there. That makes 100% of your portfolio allocated. But if you're closer to retirement, or if you want something a little safer, or just some people want safer in general, safer, it means fixed income. It means like interest payments. So lower returns, but guaranteed payments. I'm not interested in lower returns and fixed income. I don't invest in these. But if you'd like, you can replace VEQT with VGROW. It's the same thing, except it has 80% stocks and 20% bonds. So that 20% gives you a little bit safer fixed income. If you want even safer than that, there's VBAL, which is 40% fixed income. If you look at the historical returns of VGROW and VBAL, they don't provide the same returns as VEQT, but it's safer and less stressful. If you've made it this far in the video, I'm saving my advertisements and my plugs to the very end. If you're a beginner or new to Canadian finance, I've created a course for you called Canadian Finance Pro. It's 8 hours long, 60 videos where I discuss budgeting, credit, inflation, managing debt, tax, where to invest, and how to invest for beginners. I've also introduced a little bonus in 2025. With every purchase, I do a one-on-one chat for 1 hour with every new member. But because of this, I'm limiting it to 10 customers per month. In 2025, it was a little much. I can only have only 10 people can purchase this, and I'll do the 1 hour chat with them per month. In the future, I'll also be adding some more advanced sections and advanced budgeting and some downloads as well. So if you sign up, you'll be getting access to everything new that's being added. Thanks for watching. Please subscribe to the channel. It's been 6 years. I think 6 times that I've made this specific video. It's been my best performing. Let me know if you have any questions. Thanks for watching and tune in to the next one.